Hey guys, welcome back. Now, there are some big events happening in the crypto market as we speak. The US is trying to pass a bill of unprecedented size, which could negatively impact the crypto market. And yet, the crypto market is breaking out like nothing is happening. The bill is a $1 trillion infrastructure package which Joe Biden calls once in a generation. This will create new jobs, revamp roads, bridges, the water system, and the electrical grid. The problem is that some crypto bears in the Senate are using this as an opportunity to try to throw a spanner in the crypto machine. Now, this includes some impossible reporting requirements and also surveillance on accounts, which are over and above what is normal. So, in this video, I've gathered the thoughts of some top thinkers in the crypto space. We have Cathie Wood of ARK Invest, Charles Hoskinson, the founder of Cardano, and one of the top experts on Bitcoin right now, Michael Saylor. And as you'll see, they all share some interesting insights. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, Cathie Wood shares her thoughts on what is going on right now. And it looks like someone's been out shopping and bought a fancy new camera. Check it out.
The Senate is going to vote on the infrastructure bill, $550 billion, but it was hung up, interestingly, by some controversy around crypto. How to pay for some of the infrastructure bill with taxes on cryptocurrencies and crypto assets. And we believe that behind the scenes, there's fierce lobbying taking place. We believe that the tax that they're trying to enact here would really harm the evolution of DeFi, decentralized finance, which is based primarily on the Ethereum network, as opposed to Bitcoin. Now, we're not happy about this at all. And in fact, we worry that our legislators could, with an act like this, chase away technology from our shores. Already, the U.S. has had a terrible reputation in terms of regulation around crypto assets, partly because there are so many regulators and they don't agree with one another on even what these crypto assets are. We believe they're a new asset class, but I think our regulators have been trying to put them into an existing asset class and treat them accordingly. It's activated a lot of the crypto community and a lot of the innovation community because we don't want to chase innovation away from our shores. And I think that if we were to frame this, this would be a lot like regulating and taxing the internet in the early 90s, before it was really a gleam in the eye of many businesses. That would have been a very bad idea because the internet has been very good for the US, for innovation in the US, and has added a lot to our productivity and to the productivity of the world. But I think in terms of capital markets, the US really capitalized on the internet. Well, cryptocurrencies and much of DeFi is effectively unfinished business from the early 90s. We never built into the internet a payment system. And we have a chance now to do that and add even more to the productivity of our economy and the global economy. And that trying to shut it down now would be a very bad thing. And I would say that our regulators then would be blamed as innovation moves to other countries would be blamed for preventing the US from enjoying the next big thing.
So, Cathie Wood raises concerns for Ethereum, more specifically decentralized finance, which runs on Ethereum. And so we should all be aware that this could negatively impact the price of Ethereum. She mentions that the internet never really had a good payment system, and so all that crypto is doing is helping to facilitate that. Obviously, she is against Congress trying to shut this down, but she thinks that this probably won't stop crypto. All that it's going to do is to ship this innovation offshore. And obviously, this wouldn't be good for the US. Okay, next up, we have the founder of Cardano, Charles Hoskinson.
You have two amendments to this Leviathan of an infrastructure bill. You have the Warner-Portman-Sinema amendment and the Toomey-Wyden-Loomis amendment. So yesterday, when Loomis and friends posted an amendment, it seems like we were in a position where this infrastructure bill would do economic harm and other things, but at the very least, it would not necessarily create an untenable situation for the cryptocurrency business, because it carved out an exemption for reporting to software developers, validators, and miners in a way that we could continue as an industry relatively business as normal. Obviously, where we need to pay taxes, we pay taxes. Today, a new amendment just came out of damn nowhere from Portman and Company. And apparently this amendment says, well, we'll do that for mining, but not for anything else. So I have absolutely no idea what compliance looks like in this scenario. We'll have to get some legal memos and clarity, but let's be clear here. If this Leviathan of an infrastructure bill is to pass, we as an industry go from analogies and trying to figure things out to negative clarity, where there may be a burden to do something, but it's not possible to do the thing that's being asked for. If you're running a stake pool and someone delegates to you, nothing in the protocol has any notion of KYC there. So how does a stake pool operator then report to the IRS on some form who that person delegating to them is? It's a pseudonymous transaction. It's just not in the protocol, unless the suggestion is that if you're a miner in a proof of work system, contributing hash rate with a ASIC at home to a mining pool, that's fine and okay, no registration. But in a proof of stake system, 100% of the users of the system have to be KYC'd before they can delegate. This is the madness. I don't understand what it means for wallet software. I don't understand what it means for any DeFi application. Look at everything in Ethereum, all the DeFi there, Uniswap, Chainlink, all of these things. Any of those components may at some inadvertent point, or people who work on them, have a KYC component for the users. We are currently led by people in their 70s, 80s, and some in their 90s who have been around for decades, who don't understand how the internet works, how cell phones work, who wish the world worked the way it did when they were kids riding their bicycles in the 1950s and 60s, when they were watching on black and white television the moon landing. It doesn't work that way anymore. And the only way we get to stay on the scroll and stay wide on that scroll is if we're willing to accept that the next generation has something to say too.
So Charles has some big concerns over the last-minute amendment by Portman and Warner. And this basically says that proof of work, so things like Bitcoin, would be fine, but anything that runs on proof of stake would not. And obviously this doesn't really make sense. It would be like the government saying that iOS is okay, but Android is not. And surely it's up to the free market to decide. So as you can see, there are some deeper agendas being pushed here. Remember, everyone has their own agenda. Okay, and finally we have Michael Saylor, who at present is one of the most knowledgeable people there is right now on Bitcoin. And Michael makes some really good points about what happens when some brand new innovative technology gets brought to the market that people don't really understand. Check it out.
Bitcoin is crypto steel. there's a point at which everybody realized that steel was going to change civil engineering and the civilization. Without steel, there would be no New York City. There would be no building more than a few stories tall. Now, I don't know how long it took to introduce the concept of steel or electricity to the society, but presumably it took about 30 or 40 years before most people understood it. If you went to a politician in the year 1900 and you said, we invented electricity, we think it's going to be a benefit to your city, would they have welcomed that, or would they have been worried it was going to burn the city down? It takes 1,000 hours to really understand this well. It takes 100 hours to understand it not well. And in 10 hours, you get confused a little bit. Now, we're living in year 2 of institutional adoption of Bitcoin. As I was saying, a year ago, you couldn't find a single public company with $1 million or $2 million of Bitcoin on their balance sheet. So in the past 12 months, CFOs and CEOs and journalists and politicians and senators and mayors and governors and presidents are all being asked to have an opinion on Bitcoin. And it's like showing up a year after inventing steel and saying, I have this new thing. Steel ships are so much better than every other ship. They obsolesced all other ships. And steel buildings are so much better. They obsolesced everything we knew about architecture for 1,000 years. They had to throw it all away. So if I invent crypto steel, in fact, it becomes a paradigm shift in the way 100 million businesses create everything. 8 billion people are going to deal with each other billions of times an hour through 100 million businesses. How many people understand? And the answer is 99% of the politicians and the media and businesses and institutional investors, they don't understand. It's new to them. Oh, well, we'll be able to create software that'll run for 1,000 years without running down in cyberspace. Like that sounds as fanciful and magical as I'm going to create a plane, a tube, and you're going to get in it in New York City and you're going to fly to Tokyo and get out and you'll still be alive. Sounds like magic. It is magic.
So he makes a really good point about trying to bring in brand new innovative technology into a legacy system. And this has been done many times in history. And people's first reaction is always worry, concern, knee-jerk reactions before any big technology can begin to get adopted. So there you are, guys. Just wanted to keep everyone updated with what is going on, and hopefully we'll all get clarity over the next 24 hours. I personally think regulation is actually a good thing, and we all should pay our fair share of tax. I just hope that crypto gets fair treatment and is left to innovate. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.